Okay, well, good afternoon, everybody. I just see our attendees joining now. We'll spend about 2 or 3 minutes just waiting for everybody to join up before we get started. As you're joining, I just want to say thank you very much for coming to the event today, where we're going to talk about cryptocurrency crime and how blockchain analytics can help with that. Yeah, I'll just spend another 5 minutes or so and we'll wait for everybody to join. Okay then. Right. Well, let me first of all say good afternoon and welcome to this webinar between Crystal Intelligence and Chainar. I'm really glad to have you all here today. I am joined with our colleagues from Chainar, Margarita, and Federico from Crystal. Margarita is a professional anti-money laundering expert with a proven track record in cryptocurrency compliance, and she's held various positions, including a money laundering reporting officer, and extensive hands-on experience in AML processes and routine building, such as KYT, KYP, and KYC. She's one of the co-founders of Chainar, which is a compliance advisory firm based in Stockholm, which provides expert advice in cryptocurrency compliance space and conducts many virtual asset investigations. She's passionate about navigating the complexities of the dynamic cryptocurrency ecosystem and serves also as an OSC expert in virtual assets. Thank you very much for joining us today, Margarita.
Thank you.
Thank you. Also joining us is Federico Paesano. He's one of our investigations team. Federico has a ton of experience and is a very, very competent investigator, has been with Crystal for a few months now and heads up part of our training and investigation services. I myself, so I'm Nick Smart. I'm the Director of Intelligence at Crystal. I've been here for 2 years. My background is intelligence and security. I spent the first part of my professional career as an intelligence analyst before leaving to work in governance, risk and compliance, mainly in information security, before finding my way back to intelligence, where I am now at Crystal, responsible for making sure that what Crystal tells you is what's really going on the ground. So with our introductions started, I guess, sorry, I've just lost my place slightly. Today we'll be discussing some real-world examples of cryptocurrency crime, looking first at money mules, which Margarita will be discussing in more detail. Following that, we'll have a few examples presented by Federico and a short discussion by the panel. I would also encourage you all to leave feedback in the chat if you do have any questions as we go through the presentation on the subject matter or other things. Please let us know. We're more than happy to try and take questions. Although we do have some stuff prepared for you today, it's also your opportunity to learn something and share with others things you may have found or comments. So please feel free to do so. So without further ado then, Margareta, can you take us through some money mules typology, please?
Yes, of course. Let me share my screen. I will do the presentation. I hope you all can see my screen right now. So thank you, Nick, for the introduction, and thank you to the Crystal team for inviting me to the webinar. Hi and welcome to everyone. Today I will delve into the crypto crime typologies with a focus on money mules. I would like to start with mentioning that cryptocurrencies have many legitimate uses, but they also attract bad actors because these transactions can be pseudo-anonymous, fast and automated. Crypto has emerged as a disruptive force within the financial industry, challenging traditional banking systems and reshaping the way people engage with money. Therefore, crypto crime should not really be separated from so-called traditional financial crime, where fiat is used, as bad actors often mirror traditional money laundering techniques, where criminals use multiple banking services to obfuscate the source of funds. There is a risk when CEOs or other high-level managers are not really considering crypto compliance as necessity, even if the platforms or services are solely operating within the TradFi landscape. Their platforms still hold the risk of being used in money laundering schemes involving crypto, and therefore it lies in the direction of the danger that their services are not fully compliant with AML regulations. In the crypto ecosystem, traditional financial services are involved and used for illicit activities. Therefore, the separation actually between traditional and crypto organized crime and money laundering is increasingly unhelpful. Recent trends in criminal activity and the use of cryptocurrencies to launder money show how the two worlds are merging. And efforts to combat such crimes in both the public and private sectors need to do the same. Specialized crypto crime expertise remains essential for both law enforcement agencies as well as compliance teams in the public and private sectors. In the past few years, the range of crypto-enabled crimes has exploded both in size, but also in sophistication. Newer developments, such as money laundering in the decentralized finance space and the risk of cross-chain crime, mean that compliance teams face greater challenges than ever before when it comes to detecting and mitigating financial crime risks efficiently and effectively. I would like to mention common crypto crime typologies, which refer to different methods and patterns that are used by criminals to exploit cryptocurrencies for illegal activities. Those are crypto mixes, sanctions, both as it comes to jurisdictions and entities, ransomware, darknet markets, scamming, including investment scams, romance scams, and pig battering, DeFi and cross-chain crime, such as called chain hopping, cryptocurrency ATMs, NFTs, carding and stolen funds. As it comes to the stolen funds, we should mention here both fiat, as it comes to debit or credit cards that are issued by the banks, but also the stolen crypto funds that could be used for buying gift cards. Within the money laundering schemes, it is important to address money muling and money mules. And according to Europol, more than 90% of money mule transactions identified through the European money mule actions are actually linked to cybercrime. The illegal money often comes from criminal activities, such as phishing, malware attacks, online auction fraud, e-commerce fraud, email compromise, including business email compromise and CEOs fraud, romance scams, holiday fraud, such as booking, and many more. Money mules actually allow bad actors to keep being anonymous and keep profiting from illegal activities by providing them access to financial services while at the same time moving funds around the world. What is of importance to underline is transactions with crypto are borderless, which means that they are seen as a high risk. In the financial ecosystem, on top of bank accounts that are set up by Money Mules or provided access to, there is a crypto component in the form of a VASP account. That could be a client account, either a business or a retail account, which is often used for layering in the money laundering schemes. A money mule can be a person who is receiving money from a third party. It could be also crypto funds into the bank account or into the VASP account, and transfers the funds outside of the platform or the system to another bank account or another cryptocurrency wallet, or is cashing out the funds and handing the money to a third party, obtaining a commission for such services. Even though a money mule not always need to be directly involved in the crimes that generate the money, such as cybercrime, drugs, or human trafficking, they are accomplices as they launder the proceeds of such crimes. As it comes to the types of money mules, there are complicit, witting, and unwitting money mules. The complicit money mules sometimes are called purpose-opened money mule. Those could be individuals who joined organized crime groups, and they are on purpose committing crime, financial crime, and are allowing the money laundering schemes going through their bank accounts or VASP accounts. Those people can also act as recruiters who recruit more money mules that are joining the criminal groups. Witting money mules are those individuals, could be individuals that are suspecting that they might be involved in illegal activities, but actually they are willing to take risks in order to get financial gains and access to easy and quick money. An unwitting money mule, it could be an individual. Usually it is a victim of a scam. That could be an investment scam. It could be also a romance scam, or some kind of scams involving job ads or social media postings. It is interesting and I think valid to mention a campaign that was run by Interpol, Your Account, Your Crime campaign, that was highlighting the fact that you may face prosecution by acting as a money mule. If you use your account, it could also become your crime. It means basically that you may still be found complicit as part of a money laundering scheme, even though you were not fully aware of that you are part of the money laundering scheme and that your bank account or your account at the VASP has been used for illegal activities. If there are any warning signs of money mules or money muling throughout the KYC, KYB, or KYT compliance processes, those warning signs should trigger alerts in the systems, and those alerts should be addressed by the teams responsible for the detection and monitoring, and proceed to enhanced due diligence processes that are established at each company, should be established at each company. Recruiters, as it comes to the tactics used for recruiting money mules, can use different tactics. The most common ones are fake job offers or postings on social media that are offering instant and quick cash as benefits for joining some actions that might not from the very beginning seem illegal to those individuals. And most targeted individuals are usually the newcomers to the country, students, unemployed people, and victims of scams. The purpose of money muling is to clean the money and avoid detection by law enforcement. and actually also avoid sanctions and prosecution. Europol has supported a large-scale operation against 2 networks of money mule recruiters, working actually for a criminal organization that was carrying out cryptocurrency scams. This is a real case example. And the organized crime group, which was under the investigation of different law enforcement agencies, carried out a classic rip deal scams. And they were targeting actually millionaires who were interested in selling or buying properties. The interesting part in this type of a case was that the main organizers of the scam lacked the technical expertise. Therefore, they decided to outsource the part of criminal activities and delegated some processes to external service providers who have been also criminals themselves. And this is so-called crime as a service business model. The investigation was quite complex because of the complexity of the criminal scheme. And it took around 2 years to investigate this case and involved law enforcement authorities from different countries to join the forces and move on with the case and find the individuals that were involved with having different nationalities and different locations. So they were like spread in many countries. The fact that the law enforcement agents were performing crypto tracing analysis actually helped them to link 2 money laundering rings to the main group of criminals. And this is actually showing how they proceed with the investigation and were able to connect different criminals. Moving on to the importance of blockchain intelligence in compliance. Given the real case example and explaining money muling, which involves crypto, it is important to mention that blockchain-based investigations should be seen as a component of compliance checks and compliance processes in the financial ecosystem. The importance of those checks concerning transactions on the blockchain is really essential from the AML perspective. For properly navigating the compliance challenges and defining the red flags, both fiat and crypto should be included in the general risk assessment, but also the processes that are established at financial institutions, such as know your customer, know your business, and know your transaction. Moving on to the biggest challenges that are faced by compliance in 2024. Those are the AI, geopolitical pressure, financial crime, fraud, increased regulations, battle for talent, but also conducting risks. As it comes to the battle for talent, the challenge here is the still not big enough talent pool of blockchain-based investigators, both from the perspective of law enforcement agencies, as well as compliance teams in the private and in the public sectors. That would be all for my part. Thank you so much for joining. And I give back the host rights to Nick.
Thanks, Margarita, and thank you very much for the presentation. I think one of the things that struck me about this is you discussed different types of money mules, and not all of them are necessarily willing and wanting to be money mules. I also find it interesting too that there's a greater awareness campaign out there that it's your bank account, you need to take responsibility for that. So I think, like, from my side, it's like money mules are clearly there for lots of reasons. What do you think the key reason why that criminals have increased their use of money mules? Why do you think they've gone down that route? What's driven that change?
I think as it comes for the crypto, what I have seen so far is that it's an easy and quick access to the funds and borderless transactions. So the crypto is actually adding the layer to the money laundering schemes, and that is really attractive. The transactions are seamless, so it's quick and easy access to the funds, and they can be moved without any kind of monitoring if we don't include a KYC or AML-based entity in the middle. So the fact of being pseudo-anonymous is, I would say, really attractive to bad actors.
Yeah, perfect. And I think just a sort of follow-on question from that is, do you think that the rise of money mules or the growth in current months or years even has been along with greater regulation and a higher expectation of things like KYC and KYB on exchanges?
I think it used to be very attractive due to what you said, actually, that there were loopholes as it comes to regulations in different countries. Those loopholes are now being addressed, and more and more countries are regulating the crypto ecosystem, bringing, I would say, even top class, world-class qualities for the regulations. As crypto has been for very many years advertised as anonymous transactions on the blockchain, that was really encouraging to use them for money laundering or terrorist financing. It is not the case anymore, since we have those tools that are easily tracking transactions that are happening now, but also transactions that did happen in the past. And that is really convenient for all the law enforcement agents that are performing those investigations that were happening a few years ago, where there was a lack of resources, lack of competence within blockchain-based investigations. So those cases are probably being reopened and new evidence in the form of blockchain-based data and information are introduced, and those cases are proceed to the court.
Thank you. Fede, I guess on your side then, so we just talked about the growing skills and capability of investigators around blockchain-based crime, and also they're better on this, as we see the criminals now adapting their methodologies. How have you seen the change in investigators' skill over the past few years?
I think it's growing. So I'm personally, I'm really glad it's happening, and there is a shift into that. I'm also glad about bringing awareness in the form of workshops or presentations that are brought into the discussions for the financial institutions. I see more and more banks and traditional financial sector players that are more and more interested in the blockchain solutions, blockchain-based solutions, and in the crypto. They see that probably offboarding customers as a traditional financial sector is not really profitable for them in the long term. And those clients are actually moving towards neobanks, which may offer for those clients services involving a crypto exchange, because they have set up certain processes for the KYC and the KYB and the KYT as well, involving cryptocurrency. So they can do the onboarding and fully monitor the transactions. So they are welcoming those clients, which are very often offboarded from the traditional banks.
Fede, same question to you.
Yes, thank you very much, Nick. Yes, I think the situation evolved quite dramatically since a few years ago. So if I remember looking back in time, the years like between 2011, 2013, when there was basically the Wild West, and especially investigators were not able to really follow transactions, not able to do anything, that there was no tool available. There was no cases where investigators could refer to see the lesson learned. And I remember establishing the working group on criminal finances and cryptocurrencies together with Interpol and Europol back in 2014. And we had just one case we could discuss at the time. And in the last time we met, we had literally hundreds of cases, and law enforcement joining us. And also we could see the level of understanding of sophistication in the investigation techniques they are adopting, which is dramatically increasing over the years. So I usually start running my training programs by asking a few questions to get a sense of the audience and the level of understanding they have, or simple questions just like, if you have a wallet, if you have performed a transaction. And usually until a few years ago, the answer was no. Basically, they had no clue. While nowadays we see the level of sophistication growing, and also our training programs then are growing because we detect more and more sophistication by the criminals, and now we move that into the training programs that we do to include those new techniques.
Yeah, and I think one of the things that we like to say too as our side is that we build a 10-foot wall, they bring an 11-foot ladder, and there continues to be this kind of ongoing race. And Money Mules, I think, from what you said, Margarita, it's kind of like the latest twist in this sort of like pattern, right? We've gone from exchanges that didn't have a lot of KYC and a bit more anarchy, as you said, the Wild West, to exchanges that are now, it's less likely to find one that doesn't require you to provide documents and information. So then the criminals are having to find new ways of circumventing that with the use of mule accounts. So I feel like we can take some success that we've made life more difficult for them. We've now got a new set of problems to solve. I think another thing that I really liked about your presentation, Margarita, is how things have gone from perhaps in discrete groups to as a service, and as criminal activity isn't just one group helping itself, it's now one group supporting others as part of a bigger tapestry. I just wonder from your side then, without obviously going into lots of details about it, what sort of advice would you give to somebody who is a compliance officer at a VASP and is worried about Money Mules appearing on their platform? What sort of protective actions could they take properly?
I think to start with, there should be of course, those risks and different scenarios should be included in the general risk assessment. So the policy should be in place, a good policy, but also what should follow is the work routines and processes inside of the VASP. And that is essential for the common understanding of how the officers or investigators in different lines of defense should proceed with the monitoring, because for the onboarding and the monitoring processes, there are different types of checks as it comes to KYC and the KYB and the KYT checks, but also later on for the monitoring purposes, it's essential to have proper policies and work routines set up in the enhanced due diligence. And there are key characteristics that each compliance officer should know from and mirror it from the traditional financial systems that are specific for money muling activities and money mules, and should be known by a compliance officer who has a background coming from traditional financial sector. So if those key characteristics are set up in the policies and work routines, I think the activities for the scrutiny checks should not be such a challenge.
Yeah, thank you. And I think I like to about your answer is it's not just about doing one process, right? It's a holistic situation. You need to do your onboarding, you need to do ongoing monitoring, not just KYC, but KYT or KYC. You have to do all of it continuously and sort of track your client profile. And whereas we have a lot more power in blockchain analytics, perhaps to see a history of, payments until they arrive at your institution, we still need to develop a profile of who the client is. So baseline information, I think, is quite a bit important thing to get on terms of the characteristics of account, what the expected deposit or withdrawal amounts might be for a certain profile of client. Are there any unusual things? Which I guess sort of like leads me on to like Federico. So we obviously talk about money muling, and I would like to sort of move on to the second half of this presentation, which is what about nested services? So I'll just frame nested services for everyone on the call now. A nested service is similar, but perhaps different to a money mule, whereas in a nested service, rather than someone signing up with a personal account for a specific reason, they're signing up for a personal account to provide financial services to others, which then obviously provides a fairly big blind spot for an exchange. Federico, can you give us some examples on what we've seen from a Crystal perspective about nested services and money mules?
Yeah, absolutely. And just to add to your framing, I mean, in recent years we have seen the biggest effort in the industry in terms of compliance. They have been done by introducing certain safeguards, and you have seen the Financial Action Task Force pushing a lot on implementing the recommendations in terms of having exchanges performing KYC, right? So this is a big step, and now we take for granted. But I remember opening my first accounts with exchanges, and I could have called myself Mickey Mouse with no checks whatsoever. So back in the days, was exactly like that. Nowadays, KYC is performed, and it works quite well. But we are seeing more and more these bypassed by the use of nested service, as you were saying. So if you allow me to share my my screen. So I just want to introduce an example of that. When we are tracing transactions and we are seeing those transactions ending up with an exchange, right? So from an investigative point of view, that's good success. So we are seeing now the money is going to the exchange. We can use our powers. We can subpoena the exchange and get all the information that they collected for us, right? So we can get KYC, we can get a passport, we can get information about residency, etc. But what we find out in many cases is that when we analyze those transactions, we see that those transactions are going through intermediary addresses that we can identify when we look a little bit better at them as nested services. So in this case that I'm showing right now, we see an intermediary address used to make these transactions that we see made in ETH. Reaching this address with a lot of transactions perform these entities. When we have a look at the connections of this particular service or this entity that we identified, because at that stage we still don't know it's a nested service, we still think it's part of the transaction going to the exchange. What we see, we have a look at the exposure of this particular service, this particular group of addresses. What we notice is that all the transactions are going to the exchange. Okay, so this address is not doing anything else than sending this money to the exchange where the service has performed KYC, but it is the service only. So if you're an investigator following these transactions and now you reach out to exchange one in this example, they will not be able to give you any information about the subject doing the criminals doing the transaction through the nested service, because the only thing that the exchange is able to see is the nested service itself. Okay, so there is no KYC performed backwards. The only thing they know is who's behind the nested service that is operating this. And I can show you another example of this, very similar. So here we have, again, nested service, then using two different addresses in terms of the exchanges that they're using. So we have exchange 1 and 2 here. But again, we can monitor that and we can detect that by looking at the exposure of the addresses that we are looking at. So in this case, even more transactions performed, but which can be confusing. We don't know, is this a service? Is this a person? How do we identify it? It's quite easy then to look at the exposure, and we can clearly see that, I mean, almost 99% of the transactions are going to the exchange. So there's no other activity performed but allowing customers of the nested service to bypass KYC and operate on the exchange basically anonymously. And this completely disrupts what we have been doing in the years that led to what we have right now, which is to perform KYC, to implement safe checks, and not to allow criminals to use those services freely.
Thanks. But I think, like, and again, I want to pick up on this idea too about nested services. I think, like, one of the things perhaps we do in our discussion of these things is there's clearly a blind spot here, right? It's clearly a blind spot of an exchange that can't see who its sub customers might be, right? You're using an address and there are people interacting with it directly. But from our experience in the Crystal Intelligence team, like, we look at a lot of peer-to-peer service providers in, other countries that don't have like tons of licensing or regulatory frameworks. In some cases, there may be, I would not say that they're legitimate in terms of a legal side, but there's a less illegal use of them. So I guess more of a question to you, Margarita, is like, what do you think is like a legitimate way that we could work with nested services? Like, is there a way that a nested service could interact with a VASP in a sort of compliant manner? And how would you see that from your side?
I would say that at Shaynar, we view the whitelisting as a useful strategy. Of course, it should be implemented by under the strict controls and with full transparency. So if there is any detection of illegal activities, it should be well communicated and seen by the VASP, which is deciding to take this risk. It also depends on the risk appetite of the VASP, because like with all the exposure to the illicit funds that are transferred indirectly to the VASP, the illicit exposure of the VASPs also is rising. Therefore, when you look at the end at the exposure of the entire VASP cluster, there should be a question like what kind of a receiving exposure you would agree on as a compliance officer working at the VASP. So in your risk assessment, there should be a discussion and agreement together with the high level management about the risk appetite, because like receiving illegal funds also is having an impact on your business reputation. If you're suddenly changing from accepting legitimate funds to the level of accepting of illegal funds as indirect transfers to your cluster is rising rapidly, then probably your status will also change to not low risk cluster, but high risk cluster. So again, this is a question and a topic for a discussion about the risk appetite of a particular VASP, I would say. Yeah,
I tend to agree too. And I think there are obviously lots of reasons why a small provider in a country where, they've worked so hard, paid the cost of compliance, which is obviously an important step to do, and wants to be an operating platform, they need to spend lots of money on lots of things, and things like liquidity are difficult. You need to have liquidity for resources of like currencies and things to supply your clients, as well as things like cybersecurity and even some compliance processes. I do think there is a place in the market for this based on the risk assessment of the host VASP. But I think also on that part of that risk assessment is the controls that they put on the nested service. Okay, they need to keep accurate KYC information on the people they're bringing to our platform. That information needs to be producible to us on request if we are subpoenaed ourselves. the relationship between our two parties must be transparent to both law enforcement regulators and also our clients potentially as well, so they understand that kind of counterparty risk. Again, I do think there's a place in the market for it to happen, but it needs to be done, as you said, under very strict supervision and under a risk-based approach. But speaking to that then, Federico, how would you see the regulator's response to the nested services? It's certainly been something that's existed for quite a while. Like, how have you seen that on the policy side?
Yes, so we have, again, coming back to example that I made before in the past. Among the recommendations that we have given within the framework of the working group on criminal finances, cryptocurrencies, I mean, back in 2014, we pushed for putting more pressure on mixers, on law enforcement to go after mixers. And in recent recommendation that we issued, there was also one concerning the nested services. I mean, it's a concern that we are having more and more, because basically exchanges are also exposing themselves to risks, as Margarita was saying, because they are indirectly accepting transactions that they would not normally accept, because they would expose to risks. So if I can share again here my screen, we can see when we again look at the exposure, for example, in this case, I mean, we can see clearly that this service is receiving money from fraudulent exchanges, scams directly, enforcement actions, sanctions even, or unlicensed exchanges. I mean, a VASP would never accept those transactions directly, right? There would be a tremendous risk for them to see those funds landing on their addresses. But they are doing this indirectly, simply by allowing those nested services to operate within them. So is it something that is forbidden right now? It's not, strictly speaking, but recommendations that we have issued in the past was to monitor this and to promptly react. It's quite easy for the exchange to notice this activity. Of course, they will see it exactly. This is not a normal the normal kind of action that a normal customer would take, right? So we are seeing here those criminals taking advantage of maybe some relaxed overview of this topic, and not really enforcing what they should do, which is to monitor those kind of addresses, make use of tools to detect these activities. It's, as I show you in the screen, it's quite easy to see that complete exposure on the exchange from one side, and then all kinds of activities, including illegal activities, on the other one. So we issue those recommendations, and hopefully this will be implemented as soon as possible.
Yeah, and I think too, like, it's important as well to raise this, is that when you're looking at like crypto generally, and like it's being used for people to move money internationally, as we discussed earlier in the call, like, it's really powerful to have this, and we can't pretend that every service is going to have this facility to pay for analytical tools and do other things like this. That doesn't mean we should exclude them. We should just find better ways of helping them to do their job. And I feel like there is a space in the platform there, or a space in the market there, for exchanges to do that. I really thank you for your responses so far. I think as we run lower on time, I think I'd like to take some of the questions from the I really appreciate all of your questions that you've added in there. I'll start from the top one, which is, should we implement regulations on using private coins? So privacy coins is a huge topic for us to discuss. I think we'll all have our own views on it, but I guess, Margarita, how do you feel like privacy coins? Someone says to you, Monero, how do you feel as a compliance officer?
I think cryptocurrencies in general were a broadly discussed topic, and the regulations, how to regulate, how the regulators, what should be the level of restrictions and regulations, and moving from using pseudo-anonymous transactions to performing full KYC and KYT checks was not really seen as an advantage. I would say, as it comes to privacy coins, as I'm compliant, I used to be a compliance officer, and I really love the fact that I have the transparency as it comes to data and information. So I'm for doing the checks. And so the question would be like why individuals are using those coins. So for what reasons they really want to be anonymous, keep being anonymous, and keep performing the transactions on the blockchain without any checks. So I think like taking the samples of how those coins are used and for what reasons, if those are the legitimate reasons or illegitimate reasons, that would give us the picture of if the regulations should be introduced, and if so, how strict they should be. I think what we see now and what is not making people within the crypto ecosystem happy about is that more and more countries are turning into having crypto regulations in place because of, as we all know, the borderless transactions and the seamless transfers on the blockchain. So for the AML reasons, I would say that this is a necessary for knowing the data that we when we allow transactions going through our systems, because this is at the end of the day, this is like this might be indirectly involved or misused for illicit activities at some point. So tracking back and being transparent and knowing who is the individual behind all those money laundering or terrorist financing schemes is really helpful for not only the VASPs, but also for the law enforcement to be effective with their actions of stopping international crime.
Yeah, I think so. Fede, how do you feel about Monero? Like, you're an investigator, you've got your case. When you see Monero, how do you feel about life?
Of course, I mean, the first reaction is, okay, now things are getting more complicated, and it complicates the situation quite a lot. What what is a good sign is that we have seen, two things. One is that we've seen most of, many places delisting those privacy coins, so giving less avenues for criminals then to use them to cash out. But also, when we reason in terms of where we see, and as Crystal, we are capable of doing that sort of analysis to see where what kind of coins the criminals are using the most. And because you would expect, if Monero, for example, is the perfect tool, all criminals would shift to that, right? So, but we are detecting that the greatest majority of criminal activity through crypto is still done, and is done through other kind of coins, not privacy-focused coins. Why? Because at the end of the day, it's easier to cash out, requires less sophistication by the criminals, less literacy in terms of sophistication, and also you're hiding in plain sight, but together with millions of transactions, that makes it more difficult for law enforcement to detect you. Yeah, so it's a reason to be worried about, but we are still performing very successful investigation.
Yeah, I think you're right too. I think as well as the market for purchasing or selling some cryptocurrency is much better than others, and I think that's a big decision factor in the market. Certainly, it drives itself in that direction. If people, there's the reason why when people seek one particular currency over another, and it's because they can swap it. I also tend to agree as well, is that if you can stick with something simple and it works, and you find other avenues like money mules or nested services that we've discussed today, like, why would you change it? Why would you go down this route of Monero? And then also, if Monero was to pick up, an ultimately entirely criminal enterprise or majority criminal enterprise, the money launderers are going to start charging you a premium, right? So maybe if you've got dirty Bitcoin, they're going to charge you 20%. If you've got dirty Monero, they're going to charge you 50%, make your life much more expensive. And I kind of feel that's kind of how it does. I have a good question, which is, do you think that exchanges could do more to manage the risks posed by nested services? Or do you think that they leave it because there's financial opportunity from it? Like, what's your opinion on that, Margarita? Could they do more? to detect and stop nested services, or do you think they let it go because it makes them money?
I think, again, this is a question of the risk appetite, the regulation. So where, under which regulation such a VASP has the license to operate. Yes, it could be the reason for having higher gains in the times where there are more and more operating entities within the crypto ecosystem. So to attract more customers and have maybe bigger revenues in the short term, it is attractive. Nevertheless, in the long term, it might bring headaches to the companies, even to the point where the regulators will do additional checks for those VASPs that are allowing more and more illicit funds being accepted into the systems.
Yeah. How about you, Freddie? Do you think that exchanges put profit over management of this risk?
I mean, we should not put our hand under the sand here. It's a lucrative business, so it's, I mean, because those transactions are in the in the region of as you see, thousands per address, or maybe millions in a month, and they bring a lot of revenues. But I remember a friend of mine saying, no, if you think that compliance is expensive, try not complying. To be not compliant in terms of the fines you can get, the risk associated in terms of also the brand image. And I think this can become the next topic of exchanges allowing nested service to operate through them. Yes, it might be a good opportunity in the short term, but in the long term, it can create more risks than the opportunities. So I think what they should do is to put more attention to it, and be more proactive and analyzing this kind of activity, and when they detect it, to close that account and let those clients who still want to go through the proper KYC process.
Yeah, I agree too. And I think, like I said, there's a place in the market, there's a space where nested services, and again, we kind of use that term derogatory, right? Like when we talk about them, we're not talking about them that they're a positive thing in the majority of cases that we observe. But again, we tend to see from our investigation side a lot more of the illicit use of that particular thing rather than a normal or regulated one. Like if loads of money is going to a nested service and it's on a large exchange and it causes no trouble, like we tend to not notice it. We do have a bit of observer bias on our side. But that being said, there are obviously fundamental risks around these things, which again are the same typologies of money mules to a certain extent, right? Money mules is obviously an individual, whereas a nested service is a lot more. A nested service is like an actual service that uses the platform's infrastructure to operate, rather than be like an individual who's tried to deceive their way onto a platform to bring someone else's money through. Obviously, really, really interesting stuff there. And I think obviously this all gets exacerbated when we start talking about like data breaches and hacks and other things, and personal information being leaked, and tools that allow the bypass of liveness checks and KYC. Obviously conscious of the time, we're in our last 5 minutes. So I guess, Margarita, do you have any closing remarks at all you'd like to leave our audience with, or any particular words of advice about money mules you'd like to leave?
I think I have addressed the most of the topics that we discussed. So the closing remarks might be that compliance is or might be seen as a cost at many financial institutions, especially at VASPs that are at the beginning of their journey. But actually, as I mentioned before, in the long term, this is a necessity for being in the business and being operational. I have seen also the cases where regulators have been performing audits, and for those virtual asset service providers which were not really keen on having proper compliance processes, they were faced with really high fines, which were taking away lots of profit and making them at some point even thinking about closing the business. So as it comes to the compliance, yes, it is necessary. And yes, it is a growing space, especially now when the regulators are more and more educated within the crypto ecosystem. And they actually understand the need for the checks and how those checks should be performed for the licensed entities, because they are a part of the financial ecosystem, after all, allowing funds going through the system, which is not only crypto but also fiat. So that is of a necessity to have proper general risk assessment at different VASPs to survive and be profitable in the long term.
Thank you, Margarita. Fede, any final remarks?
Yes, no, I would just like to emphasize the importance here. I mean, for all the parties involved, being investigators, VASP or compliance officers, to get educated, so to try and learn more and more as much as you can in terms of basic stuff, but also the new avenues that criminals are using to launder the money. And also to use, we have them available, use tools to analyze that. There is plethora of tools, from free ones to paid ones. But, trying to investigate this kind of, transactions without the proper tools, that would be like, in the past, trying to analyze bank accounts without Excel and doing anything manually with a, piece of sheet and a pen. That would be too complicated. It's undoable at some point. So there are tools available. Try to use them as much as possible.
Yeah, I tend to agree. And I think with those final statements, I just want to draw to a close today. Thank you all very much for your attention. It's been really lovely speaking to you, Margarita and Fede. I've really enjoyed our conversation. And I really hope you all managed to learn something today about money mules and like some of the typologies that we face. I think the one key takeaway I will leave you with, and I think I write it on LinkedIn probably every 4 or 5 days, is there are tools available to you and you can't use them in isolation. They need to be part of your broader strategy to manage money laundering risk. You need to do your KYC, you need to do your onboarding, you need to know who your clients are and not just check that they have a valid ID card. And then you need to watch what they're doing with your accounts using your ongoing monitoring software. This is all part of how you manage this risk. You can use that to detect the money mules and also the nested services and to act accordingly depending on your risk appetite. But enough of me today. Thank you so much, guys, for your remarks and your insights. Thank you all much for your attention. And I look forward to talking to you all again another time soon. Thank you very much, everyone.
Thank you so very much.
Thank you very much. Goodbye.
Bye-bye.